Hi, this is George. In this video, we are going to see about BankNifty Expiry Strategy without any adjustment. This is kind of replica of the last video that we saw on Nifty Expiry Strategy without any adjustment, but there will be few rule changes as it is BankNifty. Before jumping into the video, please do subscribe to this channel and join our Telegram channel if you want any instant updates. And also please do like the video if you genuinely like it. Okay, let's get into the strategy. So this is like a weekly bank nifty strategy in which one set needs a 8 leg strategy. So it is a little complicated strategy. So it requires around 8 lakhs of margin amount. And in that 8 legs, actually 4 legs are on strangle. That is a basic strategy in which we'll be selling both call and put, and with protection, that is buying again call and put 2 legs. So that itself make 4 legs. So the other, and in that for strangle protection, we'll be having 200 points strike difference, and we'll be selling the strikes where we get the difference of selling and buying. The difference will be premium of 10 rupees. I'll explain this in detail with an example in the next coming slides. The other 4 legs would be like buying a synthetic future and selling a future with the protection of 100 point strike price. It can be either buying a synthetic future and selling a future, or selling a synthetic future and buying a future. It can be anything. For people who doesn't know what is a synthetic future is nothing but it will be having a same payoff graph chart as like a future, except in this case we'll be using options instead of future. Wherein, say suppose if you want to buy a future, you will be buying a ATM call and selling a ATM put, and if you want to sell a future, you'll be buying a ATM put and selling a ATM call. And protection in the sense, say suppose if you're buying a future, we'll be buying a put for protection. If you're selling a future, we'll be buying a call for protection. So for in this video, I'll explain manual backtesting for 12 weeks, in which I will be explaining on 6 weeks, and other 6 weeks I'll just show you how we can do manually. And in this, totally no adjustment, absolutely no adjustment. So this is really suitable for working professionals and part-time traders as well. And in this, the only thing is like if your stop loss, you can keep as like 20,000. So if your MTM is showing 20,000 loss, then you can exit from the trade. You generally start at 9:30 a.m. and book profit at 3 p.m. The loss can be very high, so please trade with caution. Disclaimer, this is only for educational purposes. Please do your research before taking any trade. This is not a recommendation, but just my view. Let's get into the strategy. So as I told you, like this needs a margin money of 8 lakhs, in which 4 legs are like these 4 legs are strangle, where say suppose the ATM is now 36,400, we are selling 36,900 call and protecting it by 200 points away, buying by 3700. Similarly, we are selling 35,900 put and buying 35,700 put. So these are all 20 lots. So one lot is 25 into 20, 500. We are selling, buying, selling, buying. The other 4 legs is like one is futures. In this case, we are buying a future. For that, we have to protect it by buying a put option. So this is actually we have bought one put option, so 25 it should be, but the remaining 25 I'll just let you know, that is like we are selling a synthetic future. So in this case, we are selling a 36,400 and buying 36,400 put. So that's why it is 50 quantity of 36,400 put option. For protection, we are buying a 36,500 call option. So that makes it as a 8 lakh strategy. Now in this I have given you like a summary. So 6th January, let me just show you what happened on 6th January. So here you can see like market is 3,700 almost. I have taken the same strategy that I told, like the last 4 are the strangle, and here in this case I have bought a future, so I would have sold a synthetic future with protection. So you can maybe pause the video and have a look at this with the rules that I have told. And I'm starting at 9:30. This is the MTM at 9:30. Now let's see how it progresses at time pauses. And here is the strike price, 6th January. So you can set everything in Opstra application. So now as time moves, let's see how the MTM moves. So even though the market is moving in one direction also, we are not getting any loss here. So by 2:30 we are getting a loss of 10,000, but it immediately recovers. So as our stop loss is only 20,000, we need not worry. And around 3 o'clock we are closing it at 10,540. That's what I have shown here. Now after that we'll just see from the last 3 weeks, so that it will not be like so much backdated date for you. So 24th of March, which is very recent. So I have set everything in place so that I'll just move the backtesting result to show you without making more time for you. You can see that there is absolutely no adjustments here. So you can just sit and relax. So 24th of March, profit is 5,450. 17th March. Before that, I'll just show you why I have shown like this. So as I told you, like a premium difference should be 10. So almost like 10 is what I am taking here, and above 500 is a strike price different. It can be 600, or even at times it would be like even 900 or 1000 also. But our aim is like almost we need to have somewhere around 10. At times we might not get exactly 10, so it might be some 1 or 2 points here and there. So let's go to 17th March. Same setup. Market is almost staying in the same place, so we need not actually panic or worry about anything here. It's 3,330, which is what I have given here. So I'm not going to explain everything. So you can just do your own back testing at your leisure time. I'll just show a few other example. So 24th February is something I'm taking because that is the day where the bloodbath of like Russian-Ukraine war came the day before. So market actually fell so much, and in the open only it was like so much down. And after start also that day it fell almost 1,000 points. So I'll just take that as an example now. So already the setup is done. Now you can see like 36,400 was the ATM, and we'll see like whether we made profit even when there was a move of 1,000 points on 24th of February. So the market has moved almost 400 points, still we are in profit. Market keeps going down, say now almost 600 points down, still we are in profit. Now again it is reversing, still in profit. Market can go either direction. See, we are making the maximum profit on that day. Though the market has fell almost 900 to 1,000 points from our ATM on at 9:30. So our profit is 17,250. That's what I have given here. Let's see few other example. I have taken 3rd March. I'll just tell you why I have taken 3rd March. So rest all the data that we can just say like we will be making profit because we have seen like almost 4 examples. But I'll just tell you like the days. So 13th Jan was an expiry. We'll see what is the strike difference that we are taking and whether 13th January for 500 points. So see, suppose the high and low, it is only like 500 points difference. So definitely we'll be making a profit because there is not a wild move here. And 20th Jan is an expiry. Actually, this is where we had made a loss. I will explain this later. So I will be let this be there. And 27th January is an expiry. And I think 25th Jan is an expiry. Let me see, 20th Jan we are making profit. Sorry, 20th Jan it is like not a 1,000 point move, it's just 500 point move, so we are in profit. 27th Jan is where we had made loss. This is 1,000 point move. I'll talk about this separately. Here again it is a 500 point move, so we are making profit. Here again 500, 600 point move. 10th of February we have taken 700 point range, so we will be in profit. 17th of February again 700 point and we have taken 700 point range, so we will be in profit. 24th March February we had already seen, and here it is a 1000 point move, so I thought I'll explain this. Other than that, 10th of March, which I have not told, is also like it's not a big move, or you can see like even 1000 point also it's not going to affect much. I'll just show you one of the example on 3rd March where it is almost 1000 points move. So this is the 3rd March. So you can see like 35,500 is what I have taken. Though initially market is showing some MTM loss, but it quickly recovers. Let's see where it ends by 3 p.m. So 3rd March we are making 6,570. 6,573. Okay. So 27th March is the only date where we are having a loss. So the setup is made. We'll see where we are getting the loss. Initially we were in good shape only. We were not having any loss, as market was not moving that violently. You can see it is 37,300. There is only 120 points more till 1 p.m. But finally after 1:30 or 2 it was moving in same direction with upside, which is where we got into problem. So you can see that MTM is showing loss now. By 2:30 it was almost showing 12,700. So then we'll see by 5 minutes. So almost 20,000 is reaching. Okay, it's reached. So once we have put stop loss, we are moving by 20,000 loss. You can see that I have booked a 20,000 loss. But just let's see like where it would have went if we have not put stop loss. 33,000 loss. Again it has reversed, 14,000 loss. And by 3 o'clock, the usual time that we close, it has become 697 rupees loss alone. And by 3 p.m. it is like actually showing profit. But I don't want to show it as profit because our stop loss is already hit and it is like 20,000 loss. So out of these 12 weeks that I have backtested, only 1 week it was a loss. And so the summary you can see like out of 11, only one, so 92% of probability of profit. Overall profit is around 65,000, which is like average profit per week is 5,000, and absolute return for 12 weeks is 8% almost. So when FD is offering like 5-6% for a year, if you are getting 8% for 12 weeks, it is good. And even the 13th week, which is like 31st of March, that was also profit. Market didn't move much, but I don't have the data right now, so I have not put it in the slide now. I can just show you like the last we have shown the Nifty strategy as well. I'll just show the difference between Nifty and Bank Nifty here. So I prefer to do both Nifty and Bank Nifty. The reason being, say in Nifty we saw like Bank Nifty just now we saw 27th of January the stop loss was hit by 20,000, but that day we actually made profit of 9,900 in Bank Nifty, sorry Nifty. Similarly 20th Jan of Nifty there was a hit in stop loss of 20,000. In that day we made a profit of 6,000 in Bank Nifty. So many times it is like one of the thing might hit stop loss. So that day we need not like end up with a like a sad face of okay our stop loss is so we didn't make any money. But ours, even though one stop loss is hit, the other way the other index would have given us little money, so that the overall loss might not be more. But also both the side also stop loss can hit. There is no guarantee in that. But I prefer to do in both the way, because if you see the summary in both the case, there is not a very big difference. Actually, it is 8.1. It's a raw data. Sorry about the inconvenience. So it's not a very big difference. So I prefer to do in both the indexes. So that's what it is. And this is actually back tested data with different strike as per my convenience, with different strike and different premium difference. You can try at your own way, like what the strike price you want and what the premium difference you want. If you want to have a premium difference more than 10, then your strike price will be little nearer, which means like your reward and risk and reward will be more. That is like your risk will be more and reward also will be more. But if you want to be more conservative, you can take a bigger strike difference with a lesser strike premium difference, and you can have more probability of profit as well. And you can try different strategies, like without having 8 legs, only 4 legs with strangles. But in case of strangles, as we know, like the payoff graph will be like in a rectangular green area, where if there is a swing in one direction, then the MTM string will be more and stop loss might hit. And maybe you can have a different strategy without a synthetic future or future, or with the futures but without any protection, or instead of future you can have a call and put buy instead of a future and synthetic future buy. It's totally up to you, but I prefer to do it this way for my risk appetite and my work schedule. As you can see, like we need not even see the market, keep seeing the market like every 5-10 minutes. We can just start the trade and we can just have that in a different tab or in the mobile app. You can just see, and only when your MTM is going against you, maybe when it crosses 10,000 loss, then you can start monitoring. Out of these 12 weeks, you can see like only 1 week it has happened. The rest of the time I'll be focusing on my work, and the trading is just a part-time for me. So I guess most of the people will be like in a full-time job. So for those people, I think this is a very good strategy. So I hope this will be helpful for you. And the video link of the Nifty strategy is also given in the description, as well as the Telegram channel and others important details you can see on that. And if you do like the video, please like and do subscribe to the channel. We will see with some other strategy in the next video. Thank you.